if you're buying precious metals as a position in your portfolio, and you have a specific reason, i.e. you want to hedge against the balance of your portfolio, then you don't look at this thing every day. You're just holding metals, and as an allocation, as a percentage of your portfolio. If you look at the industrial metals, if you just look at the ratio basis, silver is almost at where it was when gold was trading at 21.90. Gold is back some $400 from the high, and you've got silver about $1.50 away from the high, ignoring what happened a couple of weeks back when we got that little pop surge over the weekend. And if you look at platinum, it's cruising around the $1,300 level. Rhodium is north of $24,000. Copper is moving substantially higher. If you look at the industrial base of metals, they're all indicating that the demand side is expected to increase, and it will also be benefited from inflation. Gold generally leads the pack, but this time it may follow the pack, but it will be pulled along with the industrial demand in the metals. So that's one part of the equation. The second part of the equation is I do believe that inflation will run hotter, considerably hotter, and that's if you use the government numbers. If you go to the grocery store, you already know it's running hotter than the 2% target the Fed has got in its window. And there is absolutely no way the Fed is going to put on the brakes on their fiscal stimulus until at least mid-2022, in my opinion. And so you have a situation where the Fed and most central banks in the world are likely to get behind the curve. And if they get behind the curve, we could have a 70s type of scenario where inflation gets out of control, and then the Fed has to react. But until they react and they start to tighten, I just think you have to be constructive the metals. And yeah, it's disappointing. Gold is trading south of $1,800. But again, if you're a retail investor and you're holding it as part of your portfolio, this is noise. If anything, I would add to the position at these levels. And if you're a trader, yeah, you've got to be a bit more nimble because the market is moving on sort of news bites on a daily basis.
How long does a typical commodity bull or bear cycle last, and how far are we into the current cycle?
Generally runs 7 to 10 years. I think we're probably less than 2 years into this cycle. Now, again, take it off the rails, the whole economy collapses and we go into a major recession, depression, whatever you want to call it. No amount of stimulus is going to get us out of it. I think that scenario would have to be a virus type of related news event where the variants get out of control and we need to shut down the entire economy.
Yeah,
that to me would be the white swan where I would probably see the metals dropping significantly as people raise cash. I don't think that scenario is a high probability, but it is a possibility. So those are that is one scenario that I'd be watching closely. But assuming that scenario does not play out and the vaccine takes hold, and sometime mid to late summer we're back at what I would consider normal. I'm not even sure what that's going to look like, but normal. I just think the pent-up demand in the economy from the retail side and the amount of money sitting on the sidelines is massive. It's just hard for me to believe that that's not going to create an inflation spike.
The shares of Barrick held by Warren Buffett and Berkshire Hathaway were dumped a couple days ago.
He acquired the position second quarter of last year, so almost at the bottom. If I remember the pricing, it was somewhere in the mid-teens that he bought Barrick. And his liquidation, although it ended in the fourth quarter of last year, started in the third quarter of last year, and he was getting, I would say on average, he probably got north of $28 a share for it. Filing indicated this happened in third, fourth quarter of last year. So it's not relevant to today's market. For all we know, in the first quarter of this year, he's rebought the position. We won't know that until he does his filing after the first quarter at the end of March. Buffett has a tendency of being a very long-term investor when he's in, and it is true, he's always been negative gold, but he's not an idiot. And when he saw an opportunity early last year in the second quarter, with everybody spending money and trillions going into the economy in the US and globally, he saw this as an opportune time to buy gold, and he was right. And now he sees possibly the economy starting to recalibrate. He's maybe not that concerned about inflation until down the road a little bit, and he took his profits late last year when the vaccines were announced. I mean, he doesn't always hold a position for long term. Sometimes he sees an opportunity and he sells it. And if the filings are accurate, the way they were reported, he made himself 70-80% on his investment.
I've spoken to several mining executives, and they all said that silver is likely to outperform gold this year. I wonder why. Do you have any idea as to why the miners are having this opinion, and do you share this opinion?
I think that silver has a two-edged sword. One, you have and continue to have serious shortages of small investment size bars in silver. So retail investors are still chasing the silver market, and so there is a significant demand function still going into the cash silver market. It's difficult to pick up inventory, and when you pick it up, even at premiums that I consider ridiculous. $4 to $5 on 100-ounce silver bars, anywhere from $8 to $15 on coins, silver coins. I personally would rather not be in the market than pay those kind of premiums for physical product. But there, you have this continuous demand on the physical side of the market. You still have the mints that are in allocation mode. Still have logistics issues coming out of with the airlines, got 40% capacity on the airlines. A lot of this metal flies in the cargo hold of commercial airliners, and you've got a 60% reduction in traffic there, so it's hard to find space. Logistics costs have gone up anywhere from 500% to 800%, depending on location. Some of the mines in Mexico are having trouble producing the silver and getting it moved. So that's the short-term issue. The more medium-term issue for silver is that there is an expectation that the economy is going to recover. And now you add to this equation of retail demand and physical demand for investment product. You add to that equation the demand that comes from industrial use for the foreseeable future. And as long as that continues, you're going to have this variation of price with silver outperforming gold. I mean, silver ratio to gold early last year was probably in about the 80-to-1 range, and now it's trading at 65-to-1 or better. So I see that continuing. And even with gold getting hammered, I mean, 2 weeks ago at 1850, now at 1780, silver is basically up in that same time window. Again, take the aberration that happened 2 weeks ago, but it's trading at the mid 27s. So there's obviously continuous demand and supply issues with silver, and I don't see that changing in the foreseeable future.